Good morning, everybody. Mike Vacchi here for Princetontrader.com for ntmarkets.com. Okay, 88,000 jobs versus 190,000. That's not going to cut it, especially not when you're trading up in the 1550 area. So we have sold off 1.2% at this point, trading around 1535, 1536. The low of the day is 1534. And for those of you that have followed me for a while, I always say whatever happens before the NFP, it doesn't really matter. And don't game it. I mean, there are certain situations where you can, but don't game it, because yes, you might be right, but if you're a more experienced trader, the question you're asking yourself when you're about to game that employment number is, how much money am I going to lose if I'm wrong? So you've really got to be careful there. The breakdown from the NFP came from basically the 1545 level. 1534 is our low. So that's the initial range that I'm working off of today, 45 to 34. We've done a little pop here. We just exited that on the long side, and we're kind of waiting. We didn't do, we couldn't hold 39. 37 was a big level for me. That did not hold. And so now I'm looking at whether or not we can do a double bottom down here at 1534. I think what's more likely is that we extend down into the 1532 level, because there's a fib level down there, and there's some other key areas of support. If we break 32, then we get into a situation where the market pretty much has to reach for the 50-day exponential moving average. Okay, here's a daily chart. The red line here is the 50-day exponential moving average. That's at 1524. Yes, I do see that we are punching the lower Bollinger Band, but what you also need to see, and let me expand the bottom of this window here for you. The bands going into last night were remarkably tight, tighter than they have been in some time. And when Bollinger Bands get that tight and they start to expand, they can run a lot farther than you would expect. We typically see this in oil and gold, but we may just be getting ready to see it in the ES. And that sets itself up for a ride of the lower band. And an 88,000 employment number versus 190,000, what they were looking for, sure tends to put me in a sell rallies mode. Okay, am I saying short it? What are we? 33 handles in the hole? Absolutely not. Absolutely not. There will be people out here saying, short that 36, looking for 26. The market just has not traded that way from the downside. There have always been bounces. There have always been opportunities to get in, and I would wait for one. If you want to do that, if you really want to do that, then you can, but you have to be incredibly wary of losing a 37 to the upside, getting back over 43. I mean, these are things you have to keep in mind. So you can do anything in the market. You can do anything you want in the markets as long as you have a stop and control your risk. Okay? So if you want to short, if you think we're going straight down, that's fine, but 1537, 1538 would be my stop on any kind of a big bet like that, because you are 30 handles in the hole. Ask everybody on Sunday night that shorted the ES 26 handles in the hole after the Cyprus news, how that worked out by noon the next day. Not very well. So keep that in mind, okay? If there's a bounce and that bounce fails, then by all means take a look at it, because we're coming out of a huge volatility expansion on the daily chart. Okay, everybody have a fantastic day. Mike Vacchi, Princeton Trader for NT Markets. Check us out at Princetontrader.com, and I will catch everybody Monday with another webcast. Have a fantastic weekend. Trade them well, everybody.